Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back, everyone, to another edition of All Things Financial. For those of you who are concerned about what's going on in the coronavirus in the markets, which is all of us, I thought it would be nice if I could come out on the show and get the word out a little bit on what historically has ever happened whenever there have been crises, and they're always different, but sometimes the market impacts have some similarities. So whether we went through things in the past like 9/11 or Hurricane Katrina or the tech bubble bust or the financial crisis in 2008 or the coronavirus crisis in 2020, the crises are usually always very different. They're unpredictable and they're real scary and they're real. The market impact is sometimes a little more panicky and sometimes predictable. So what we're looking at here is an uncertain and unknown coronavirus risk to everyone's health all over the world, and it's been declared a worldwide pandemic. So we have to do, I think the main thing we have to do is stay calm. I think we have to stay prudent and responsible to ourselves and each other. I think we need to do and follow the medical guidelines, avoid as much social contact for right now to slow down the spread of the virus. And they're correct, washing our hands and things like that. So follow those instructions that the medical community is giving us. The government is trying to come in and help businesses that are very likely going to see these slowdowns continue and very likely going to see earnings and profits drop. They're going to struggle through this, having people work at home, trying to work their way through this, which is testing, such as Twitter right now, requiring as a mandatory all employees must work at home, not so much only for the coronavirus needs right now, but also as a test run, I understand it, to make sure that if companies have to have employees work at home, that the economy and the financial institutions and all continue almost uninterrupted. So they're testing these models out too, which can be a very strong sign for our economy. But in the short term, we should expect to see a lot of uncertainty. So we'll see, as we already have started to see, companies closing, sporting events closing. We're seeing unprecedented actions to try to help slow the spread of the virus. So I want everyone to realize a lot of these measures are preemptive measures, trying to get ahead of this to try to slow down the spreading of the virus so it doesn't become cataclysmic in the United States. So I want you to recognize that first, as opposed to they're canceling all these sporting events because everybody has the coronavirus, is different than they're canceling all these sporting events because they don't want everybody to contact and contract the coronavirus. Do you see the difference? And then what we have in the markets. And before I leave that topic, I did read that we are to be very, very aware to try to take care of the elderly and anyone who has medical susceptibilities and vulnerabilities. So try to place our attention there and do the best we can to help others going through this. Now, as far as the markets, which is the other biggest concern that many people are approaching me with, what's going on? Should we pull out of the market? Should we stay in? Is it too late? Should we buy into the market? Or is this a bottom? Where is the bottom? How do we know exactly what to do? We're scared. And that's the other reason why I thought I'd come out and talk to some of you. The way markets work is very fluid. I mean, when we get crises or any bad news, they're going to fall. And in this case, the markets fell a lot from an all-time high. Don't forget that. Where they fell from was an all-time high. So there was a normal drop in the markets, maybe even a bear market that was being predicted before this coronavirus, and now the oil fighting between the Saudis and Russia, and maybe our Marcellus Shale also comes into play. Before any of these events, there was already talk of we could expect the likelihood of a bear market, or at least the market pulling back some, or a correction. So now the coronavirus especially exacerbated that and put us on a cliffhanger type of a fall as a free fall. But lately, it has turned into a panic selling. When we see that in the markets, we begin to realize there's further to go in the drop of the markets usually through the panic scenario. So expect that, but don't fear that. Because in normal situations, in all of history that's been recorded history of the stock markets, there have been many events like this before on stock market crashes and stock market bear markets and recessions. There's history and data showing we've come out of it historically on the other side, healthier and stronger each time. We expect this time to be no different, although very difficult and tumultuous throughout this event. We expect it to be no different, that historically we should come out of this on the other side, the market's rebounding, becoming stable, becoming re-cemented in new fundamentals, pulling us out of this after the coronavirus is more known. I think the biggest concern right now is the uncertainty and the fear. And I think as things over the next couple months play out and stabilize a little more, I hope everybody will recognize, okay, maybe the markets will stop falling someday and not go to zero, which is a lot of people's concerns. And number two, that if people are in the markets, if your time frame is still the same as it was and your risk tolerance is still the same as it always was, and your needs and goals are similar, then you're probably best to contact your financial advisors and make sure, are you still on the right path in spite of this market drop, which will most likely be temporary. Temporary can mean a short period of time or a longer period of time, but it's a cycle that historically, typically rebounds, comes out the other end, recovers, and then we move on as a point where we used to be before the markets dropped. So I just wanted to share all that with you. We're not alarmed. We are concerned about the reality of the crisis. We are aware of the reality of the market volatility, which will not only happen this time, but just like in the financial crisis in 2008, and just like in 9/11 in 2001, and just like in the tech bubble bust of 1999, we will recover. And this too shall pass. So everybody hang in there, stay calm, stay rational, don't panic. We'll get through all this together, and we'll see each other on the other side when things recover, as they always historically have, and that's what we expect this time also. Thanks again for tuning in, and I'll be back again with more information and keeping you up to date on this on an ongoing basis.